Hey everyone, this is Ryan Mallory for SharePlanner.com. Doing another Google Hangout with you guys today. Bit of a backwards market today. Up, down, up, down, up, down. You just really don't know which way this market wants to close out the day at. However, oil futures, have stopped, and now we're starting to, or oil has stopped trading on the day, and so now we're starting to see maybe a little bit of a pickup in the market. We've seen that a lot of late, where once that 230 mark hits, the market starts to run. So it'll be interesting to see if that happens again, if the pattern repeats itself. Really just a directionless day for the most part. Granted, the bulls have managed to keep the market from selling off. We were down below 2040 at one point today. We're at 2048 now. However, and this is the part that's it's not sitting well with me quite yet, but it's not a reason to sound the alarms yet either, is the fact that we're not getting above this resistance level, this declining resistance level off of the December highs. Ultimately, the bulls need to push above that. Now it's tapping it, it's tapping it, and it's tapping it. And that's a good sign. But it needs to push through it at some point. The theory tends to be that as long as it taps it, and if it doesn't pull back aggressively after testing it, that's a good thing. So yesterday it tested it, it did not break down. Today it's testing it, and it's just been stagnant. So I don't see where the testing is a reason to sound the alarms yet. However, I will feel much better about things, and I don't like to use the word feel, because the market needs to be very objective when you're doing market analysis and everything. But it does concern me, though, that the longer we spend underneath it, the more opportunity it is for the bears to come in and push the market lower and keep everything technically in place. So yeah, as a person who's holding a few long positions right now, I would like to see the S&P push through that barrier. Now, the big story on the day is oil. Oil is a huge problem. Let's look at USO here. The one thing that's somewhat intriguing about it right now is that it's holding that 5-day moving average. Other than that, it looks horrendous. This is what we call a bearish kicker, where you have a push higher, a very strong push higher, and then the next day you gap pretty much at or below the opening of the previous day, which is what USO managed to do, and sells off. So you get a big bar up and a big bar down. But that's what they call a bearish kicker. Very bearish. It tends to cause some problems for the longs. It traps them in their positions, and they take some significant losses, which, if you were trading crude futures last night, and I don't know why you would do this, but I'm sure there's plenty of them out there that will do it. They buy the futures, and then they go to bed, and then they wake up this morning and crude is selling off like a maniac. So that is a big problem for USO right now, is this bearish kicker. Now you look at the weekly chart pattern of it. It looks pretty rough. I mean, you got this massive shadow where it's leaning towards giving up all the weekly gains here for the week, and that's definitely no good. So in one day, okay, we have wiped out, a good. I mean, it's rallied going back to Friday. I guess what is that, 17% or so that it had rallied at one point, but now it's given up yesterday's and today's and most of yesterday's gains. So definite problems on the oil front. Let's look at some names like Halliburton. What's interesting about the individual oil names like Halliburton, Schlumberger, and Chesapeake Oil, and some of the others, is that they're not really selling off. You would think that if oil is down 8.25%, Halliburton would be down more than just 1.8% on the day. Considering the run that it has been on the last few days, you'd think that it would be struggling a lot more. So Halliburton is only down 1.8. Schlumberger, though, is having a little bit rougher of a go of it. It's down 3%. Still nowhere near the kind of weakness that crude is actually showing today. And then finally, you have CHK. The reason why I bring these up, particularly like CHK, pretty volatile beast CHK is. I mean, you do this, you gotta be looking for possibly an ulcer if you take the trade on it. It's not that it's not a valid trade. It's just you got to be cognizant of the kind of beta that you're dealing with on a stock like CHK. Only down 2.6%, less than Schlumberger, more than Halliburton. But if you're looking to play this oil trade, and I'm not saying that oil is going to bottom after today. I'm just not. The potential is there that this could just be a head fake and it's going to rally tomorrow, okay? And I don't have any oil positions in the portfolio right now. But the way you can play Chesapeake basically is buy it at or near the close of today, put a stop loss below the day's lows. Okay, so for the instance of CHK, you would buy in somewhere like, let's say if it closes at 2042, you get it, somewhere around there. And then you get a stop loss at 2020. Actually, what you could also do too is maybe play like a break of the 5-day moving average, because it's still trading above it. That you still are trading with less than 2% risk unless you get that big gap down, which it had today. Is that you're going to make a push up into this gap here, and of course the gap is way up there. It's at almost $23. So you have, I don't know, what is that, like a 12% reward opportunity, and on paper like a 2% risk, so 6-1. However, there is the potential for a gap down, particularly in a stock like CHK. So you could be talking about 3 or 4% loss, if not more. Halliburton would be a similar play. You'd get in and let's see here. You could probably even be a little bit looser with the stop loss, putting it perhaps below Monday's closing price. Let's just say ballpark figure like 41.42. You get in around 42.6 and see where it wants to take you. This has a really nice basing pattern here. It's not pulling back right to the basing pattern like CHK did, but nonetheless, you do have that gap up going back to that Thanksgiving sell-off. So you have 47 to the upside, so a little more than 10%, and then probably about 2% to the downside. So there's some good risk reward opportunities here in oil, and I'm not saying that I won't eventually do it. I may even wait till tomorrow to buy it, just because I can eliminate the overnight risk at that point. Because there's still, when you look at these trades, there's still some padding that if it doesn't gap up 5% tomorrow, you can probably still get in the trade. Schlumberger pulling back to the base, but a little bit below it. So I don't know if I like this one as much. The candle is a little bit more of too much of a bearish kicker for me and not a doji. So I would probably stay away from SLB. A couple other swing trades to keep in mind. KATE needs to get above the 200-day moving average, not because it's failed every time it tests it. It's just that there's a lot of reversals that are happening near or at that 200-day moving average, particularly in the past week. But also if you go back to January, back again to November, and then again back in August, Kate hasn't all exactly gone or tested the 200-day moving average, but it's gotten darn right near it, and then it sells off. So, I don't know if it's some kind of like magnetic, or some kind of like just rejection there, but by getting too close to it. But nonetheless, there is a little bit of a trend there. So if it can get above the 200-day moving average, that would be a whole lot better for this trade. So maybe like above like 32.50, you can feel a little bit better about putting a long position on with KATE, or better known as Kate. Okay, JMPR. I like this trade a lot. Yesterday, it sold off today, so this is really a trade for tomorrow to keep an eye on. If it can get back above the day's opening price, if it can do that tomorrow, but above today's opening price, hopefully you understand what I'm trying to say there. Very nice basing pattern of, sharp pop off the lows, obviously from in October. And then you have this, few months of consolidation that is trying to break back above. Keep that one in mind. Another AEM, obviously a higher risk one. You're getting into the to the miners here, but coiling really nicely at the highs. You could possibly put a stop loss these are a lot harder to play because you're talking about probably like 5% stop loss. So maybe if you got in at like the current price, I'd probably just put the stop below yesterday's lows. So yesterday's lows was 33.22, so 33.20, 33.21. Yeah, so that would give you a little more than 3% risk, but nonetheless, maybe a trade worth taking on. And then BA, Boeing. Nice flag here. I'm kind of surprised it's not pulling back at all here. I thought about taking the trade today. Haven't done that yet. I opted for Apple instead. But Boeing overall, nice flag pattern there. If it gets above that, what is that, around like 148, could see maybe another 5-6% come out of BA. It's very strong, man. After earnings, everything done really good. Volume still looking very strong. So keep that one in mind as well. I'm about 60% long on this market. I got UPRO, which is a leverage, so it gives me a little bit more exposure to the long side. It's done really good. Like the S&P, it needs to break above that declining trend line there. If it doesn't do it by the end of today, that doesn't necessarily mean sell the position, but it doesn't make me feel more comfortable about going into tomorrow. So it would lead me to trim some of our long positions, which I'm probably going to do anyways. But yeah, it's got the 5-day moving average underneath it. That's good. It is struggling some of the 50-day moving average that we've seen the last 2 days. A couple other ones, DLTR, kind of leaning towards getting rid of this one before the close today. That would be my cell phone going off there, vibrating against the desk. DLTR, breaking out the flag. It's been a textbook perfect so far, but it's second day outside the upper Bollinger Band. It's still got some good solid volume to it, though it is declining. However, we just don't see a history of multiple days of, we'll see like 1 or 2 days outside the upper Bollinger Band, but we don't see much more than that. So we have it right here, but then it sells off some and then it consolidates and we see it consolidate here. So I may go ahead and just ring the register on this. We're up about 5.6% in the last 3 days on it. Bought in at 71.28, and it's currently trading at 75.22. So a really good trade overall. Netflix has been the big downer. Excellent breakout yesterday. I mean, just beautiful. I thought we were probably going to be onto something here. You got the expanding Bollinger Bands. Let's go ahead and take them off for now because I don't need them. But it needs to, if you look at this the 5-minute chart, it really needs to get back above 452. You can even see the same kind of action on the 30-minute chart. Above 452, it's probably worth keeping. I'm on the fence right now about anything below that. So that could be axed too. And depending on where it's at the end of the day, right now we're just holding on to just a shimmer of a profit. So let's see what other ones are worth going over here. LO, we're down about 0.4% on this one right now. Not good, but it's not a bad loss at all. But the problem is it broke out yesterday. Really good, solid breakout. Did exactly what I wanted it to before the close. Now you look at today, and this is a tobacco stock, so this is definitely like a defensive kind of play. People are going to still want their tobacco, regardless of if it's a bad economy, good economy, or something in between. But I mean, you're just selling off 1, 2, 3, 4, 5, 6, 7, 8 straight red bars on the 30-minute chart, and there's only been like 2 the entire day. So 8 out of 10 to the downside, or 10 out of 12 to the downside, and 8 straight. So I mean, at some point you think it would bounce today, but we're coming up on only 50 minutes left in the market. So it's time's running out for it to make that move finally. So there's this consolidation area, but why hold it? It's got earnings coming up on the 11th. So I was hoping to get like 3 or 4% out of the trade. That obviously doesn't look like it's going to happen. Maybe tomorrow's a new day and it does happen, but I don't want to hold it for another night when it's not behaving properly for us. So that one's probably on its way out today. And then the Apple trade. Apple overall as a stock, I mean, it's breaking above this resistance level. Excellent look. Just perfect. Broke out of the sideways channel today. There's a good chance that, if we can hold on to it long enough, that it'll see 130 in the days ahead. So that's going to do it for today. If you guys have any questions, feel free to ask me. You can send me an email to ryan@sharepointer.com, or you can hit me up on the Splash Zone if you're a member. I'm in there every day, 9:30 to 4. Actually, a little bit before and a little bit after. So I'm always willing to take your questions there. If you have any stock ideas, feel free to post them there. I'll be happy to give you my best 2 cents on the trade ideas. Or if you just have any questions about trading in general, I'm more than happy to field those too. Y'all have a great day. Stay out of trouble, and be willing to be patient with this market a little bit as it tries to figure itself out today. Thank you.